Welcome to the B.F. Anderson Technical Report for December the 10th. Now this is not the end. It is not even the beginning of the end, but it is perhaps the end of the beginning. Winston Churchill. You know, with the coronavirus and now that we have a vaccine, I think we have to see the end, that there's the beginning of the end with the vaccine. And I really think that that's what's going on with the stock market, where it is seeing the end of this catastrophic economic situation. So the market discounts the future. Just be aware of that. So let's get right into the charts. Nasdaq continues to be very constructive. All-time new high. Slight pullback today. However, as you can see, we peaked here in September. Consolidated. You know, it's like this. You know, the market had a tremendous 5-month run. It cannot continue to go up forever, because if it does, then we'll have a bubble. Then when the bubble pops, then we got real problems. But anyway, we ran up for 5 months, peaked, pulled back, consolidated, low, higher low. Now we're making higher lows. Now we're making higher highs. This is very constructive. Now here is the weekly graph. Where we got the 35-week moving average. Everything looks really good there, no problems, indicating a bull market. Here we have a new graph, or new indicator that I'm bringing on board that I've looked at. Now, there's a lot going on here, so let me show you what we have. This is an index price of the New York Composite, so you can see. Here I have something called the New York High Low, which is the number of new highs on the New York Stock Exchange minus the number of new lows, so you get like a net new high figure. Well, you can see how constructive this is. I mean, we are really making good progress on the number of new highs versus new lows. Then I've also got it the same ratio calculation. Down here is a 10-day moving average, and you can see that's quite constructive as well. You know, if I see a bull market, if I see a bear market brewing, I'm going to talk about it. I'm going to say things like, you need to be careful here, you need to be defensive, things like that. But right now, this really looks like a very promising market. Here we have the number of new lows. Again, you can just see no problem whatsoever. Not getting a whole lot of new lows here. This is the monthly graph of the 10-20, which is the 10-month versus the 20-month. We look for golden crosses, golden cross on the S&P, golden cross on the Nasdaq, golden cross on the ETF we use for China. Now, on the aggression index, this is a ratio where we compare technology, Nasdaq, to consumer staples, toothpaste. So you can see here when the line is going up, it means that investors are more comfortable with technology stocks and growth stocks than with defensive soap. In other words, if people start buying a bunch of toilet paper stocks or soap stocks, it's telling you that they're nervous and they're being defensive. That's just not the case here. Now, the actual indicator, the way that works is we have the 40-week moving average. This is a weekly calculation of the ratio. Actually just made a new high. These are the economic indicators that we look at. As you can see here, interest rates are starting to kind of creep up. I would say a breakout above 1% on the 10-year U.S. Treasury note would be a meaningful move. Now, this is oil, which is the West Texas Intermediate crude, kind of rallied somewhat, now flattening out. We'll see. Same with the financial stocks. Things are starting to flatten out a little bit after a nice rally. Here's the S&P, where we're looking at it on a 25-day and a 50-day moving average. It looks constructive. This is the 200-day moving average, which we'll talk more about later in the video. Now, this is the put-call ratio, where we're measuring fear and greed. And as of Tuesday, the reading is just getting somewhat it's just in the stratosphere. These are some of the highest readings we've seen in greed pretty much ever. I mean, you can go back to the top of the market back in 2000, and you will see numbers kind of like this. Now, the thing about it is this. If you look at the graph down here, you can see back in other periods where you've gotten extreme greed, the market really didn't have that much of a problem. This is a secondary indicator, but something to be aware of And when you get an excessive amount of greed, just like when you get an excessive amount of fear, it usually sets the market up for some type of change in short-term direction. Just be aware of it. Volatility index continues to improve. Little pop-up here recently, but looks fine to me, below 30, which is very acceptable. Now, I thought this was an interesting graph. This is a cumulative calculation of the number of advanced decline volume. In other words, we take on the Nasdaq, we take the advancing volume minus the declining volume for what we call a net AD volume. So it's a cumulative line, and you can see here since the March lows of March 23rd, the volume as far as advanced declining volume has been very positive, and here recently has really somewhat taken off. I think this is a very powerful statement. This is an ETF that I thought was interesting called Amplify Online. It's an ETF of online retailers. And you can really see what's happening here. I mean, the brick and mortar retail industry really appears to be on the ropes. Now, this was something I wanted to mention here. This is the percent of stocks in the S&P 500 that are above their 200-day moving average. And as I've always said, the 200-day moving average is somewhat important. So what I've done here is I've gone back to 2002 and looked at every time that we've gotten down way down here to where 95% of the stocks were below their 200-day. Then they reversed and went to a point where around 95% of the stocks in the S&P were above their 200-day. So real bad drop, bear market, then a reversal and an upturn. Well, this has only happened very few times. So if we go back to 2009, which was the financial crisis, you can see we got way down here. Nothing was working. And then all of a sudden, boom, there we go. We're back above 95%. And you can see it really indicated a low in the market. Well, this has just happened recently. We're seeing this right now. We got down in March to 95% of the stocks below their 200-day moving average, and then boom, now we're up to 91.38 above. It's just an indication of a bull market. Just wanted to bring it to your attention. This is another indicator. Now, the whole ball game here, in my opinion, and some other analysts that I'm working with are telling me that the bond market is substantially larger than the stock market. There's just a much more money involved in the bond market than the stock market for various reasons. So what I did here is I took an index, a ratio, comparing the Vanguard Bond Index Fund, Total Bond Market Index Fund, and I'm comparing it to the Vanguard Index 500 Index Fund, Standard & Poor's 500. So when the line is going down, it's telling you that stocks are doing better than bonds. And then you can see here around the bottom of 2000, 2003, bonds did better. They did better here in the financial crisis. But then ever since then, this has been tapering off. Now you can see here, we're making a new low on this ratio. So the point is this. I don't know if the bond market is 10 times bigger than the stock market, but I just know it's a lot bigger. And so as the money moves out of bonds into stocks, and you have to realize most investors will only do things that are apparent at the time. So if bonds are doing poorly and stocks are doing better, that money's going to flow out of bond funds into stock funds, and it's just something to be aware of and could be a major catalyst for this market going forward. This is the International Growth Fund of Vanguard. I thought this was interesting. Look how parabolic this move is. It's just showing that this bull market that we're involved in is becoming somewhat international. Now, I went and looked at the top holdings of this particular fund, and I must say quite a few positions in China, and also they had Tesla, which is a U.S. company, but also considered international. Now, in the top 5, we'll just take a look at this. Now, remember, the top 5 is not a buy list. What I'm trying to do with the top 5 is simply look at stocks that are at the top of our list but also to study the charts so maybe you can understand what I'm looking at, which is various chart patterns which seem to have statistical value. Here is Freeport-McMoRan. The stock's been pretty much following that 10-day moving average. We like the 10-day moving average. We like the 50-day moving average as a way to monitor our portfolio on a daily basis, but Freeport-McMoRan is definitely in an uptrend. Now, here's a company called GrowGeneration. This is a company that's involved in the marijuana industry. Now, just for educational purposes, you can see here, this stock is somewhat rolled over and broken below that 10-day moving average. So it would just be something to be aware of. You can see that going back all the way to what I would call the initial buy signal, the stock's been pretty much faithfully following that 10-day. So when it breaks below it, you need to pay attention. Now here's Moderna, which we talked about last week. This is the vaccine company that's working, also with, we have Pfizer, Moderna, Johnson & Johnson. The stock has, been somewhat parabolic. In my opinion, it needs to stabilize. However, it is holding above that 10-day moving average. However, volume to the upside is somewhat slackened off. So I think I would wait on this one. Invitae, which is a biotech company, we're seeing quite a few biotechs. You can see here making a new 52-week high, pulling back a little bit today, but the overall pattern does look very constructive. Here's Pinterest. Now this is a internet stock that has to do with internet marketing. You can see the initial buy signal here on extremely high volume, and you got what you call a gap up. And ever since then, that stock has been pretty faithfully following that 10-day moving average. So it's somewhat of a pattern. It closed below the 10-day today. However, 4 days ago it closed below. No big deal, but I would be aware if the stock were to break down further from here. So that's it. If you have any questions, please give me a call. Thank you very much.